Consider this scenario. You are in debt and need money right away, but you're having trouble paying off your debts or paying your bills. If you had an emergency fund, you wouldn't be in such desperate straits. Having an emergency fund will not only alleviate your stress, but will also boost your financial well-being. If you are wondering how do I go about it, stick around because in this video, we will tell you how to build an emergency fund. What is an emergency fund exactly? It is money laid up for unanticipated needs like medical bills. An emergency fund can also assist you in coping with a lack of income due to a job loss or prolonged illness. Using money set aside for unexpected payments might lessen the need for the costs associated with paying them with high-interest credit cards or personal loans. Here are 7 simple steps to get your emergency fund up and running. Number 7. Determine your emergency fund goal. In order to establish how much money will be needed each month to meet your necessary needs, you need to know the goal you want your emergency fund to achieve. In order to get this figure, tally up your monthly spending for housing, food, transportation, and other essentials. Then multiply by 6 to get the amount you need to cover 6 months of expenses. For most families, the 6-month objective will be a long time away. Number 6. Make a budget. Having an idea of where your money is going and how to save it is essential. Planning your finances allows you to make the most of your earnings while also reducing or controlling your spending. If you're looking for an easy way to keep track of your spending and income, consider using a budgeting app like Mint, Pocket Guard, and Good Budget.
Will do.
Number 5. Don't increase monthly spending. Don't allow your expenditures to rise once you've established a routine of saving. For instance, if you give up the practice of purchasing a new bag every month just to replace it with a new monthly buying habit, such as purchasing a new pair of shoes monthly, you are not saving any money at all. In other words, don't increase your monthly expenses. The only thing you need to increase is the amount you're saving in relation to the period you specified. Keep an eye on your screen because we'll talk more about it later. Isn't life better when you reach your savings goal quickly and are well prepared to meet any unforeseen financial requirements?
Even better.
Number 4. Start with small contributions. Start with a tiny amount of commitment. You won't be able to rationalize stopping your savings habit since your cash flow won't be stretched. Find something you can do without or with little in your existence. It won't kill you. Determine how much money you want to set aside each month, week, or whenever you are paid. The most essential thing is to make your contribution a norm rather than a one-off endeavor. Speaking of contribution, why not contribute to the growth of this channel by subscribing? If you do, I can assure you that we will be of service whenever you need a financial assistance. Number 3. Gradually increase your savings. You should make it a habit to gradually boost the amount of money that you put into your emergency fund by either 1% every year or a predetermined amount, and continue doing so until you have achieved the target amount of your savings. Also, keep an eye out for unanticipated revenue. At the very least, a portion of any income should be put into an emergency fund. A tax return, bonus, financial gift, inheritance, or winning a competition are all instances of unforeseen funds. This money should go towards your emergency fund. Number 2. Save after reaching your goal. According to Greg McBride, CFA, Bankrate Chief Financial Analyst, by nature, unplanned expenses are unexpected. So the sooner you're prepared, the better off you'll be when the inevitable happens. An emergency reserve sufficient for 6 months may not be adequate in certain circumstances. There are 2 situations in which having a bigger emergency fund will come in handy, such as being unemployed for a prolonged length of time and being hospitalized for a prolonged period of time. Evidently, having an emergency fund will continue to be important, and there is more to talk about the importance of having one. So please stick around for that. Number 1. Automate your savings.
The best way to fund your emergency account is always the best way to save money for anything, and that's to save money automatically.
Establish a separate bank account that will serve exclusively as your emergency fund, and arrange for the amount of money that you decide to contribute each month to be put into that account directly. Make use of a savings account or any other form of account that restricts your ability to withdraw money quickly. In this manner, you won't risk losing any of your hard-earned cash by touching it. After all, out of sight, out of mind. Why an emergency fund is so important. An emergency fund is essential as part of a healthy financial plan. It might prevent you from using high-interest credit cards or taking out a loan to meet unexpected expenses. In the case of an unexpected expense, having an emergency fund might provide you peace of mind that you'll be able to handle it. According to a Bankrate research, 4 out of 10 Americans could save $1,000 if they needed to. The findings emphasize the need of having a well-stocked emergency fund, while also emphasizing the importance of saving as soon as feasible. It's never too late to start emergency fund investment. But perhaps you are in debt, and you might be thinking about how you can start an emergency fund while you have this debt stressing you out. Well, don't panic. There are methods to get out on how to pay off debt, and our video on how to become debt-free fast, Ultimate Debt-Free Guide, will guide you. So kindly check it out. See you there.